The Magnificent Seven have captured 90% of this year's returns, creating one of the most concentrated markets in history. But there is a different story. 2025 could belong to many smaller companies trading at deep discounts. So the question is why, and could this be the market's next big rotation? We're going to talk about that right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thank you for joining me today. Joining me for this conversation is Tom Marr. He is a portfolio manager at Hilton Capital Management. Tom, really nice to see you. Thanks for joining me. And, we are really interested in this small and mid-cap part of the story. Obviously, the large caps, S&P 500, et cetera, got a lot of attention this year, considering that the S&P is up something like 25, 26%. But our brothers and sisters in the small and mid-cap space seem to have a little bit more room to grow. So I guess the question that I wanted to look at with is, when you look at tech, you look at the Mag 7 and all the AI stocks, why should investors right now be paying attention to some of those small and mid-cap names?
Sure. Happy to be with you here today. I think there's a couple of things to think about in that regard. And first of all, you mentioned it. The Mag 7 is now nearly a third of the S&P 500. So that's a massive concentration in just a handful of stocks. If you look through history in markets, and I'm old enough to be remembering the dot-com craze, those eventually do correct. And when that happens, oftentimes parts of the market that have been left alone or left for dead come back to life. They come to the fore. In that case, it was value in smaller cap stocks. And we think there's a couple of reasons that may happen. First and foremost is simply math. I mean, you have a couple of giant buckets with most of the capital in them right now in terms of equity investors. If those start to move out, people start to look to broaden their investments, just part of those market caps coming downstream are very significant to small and mid-cap stocks. The second is more from a fundamental perspective. If you think about a lot of the trends that we've seen sort of developing in the economy, you might have reshoring, you have rebuilding U.S. manufacturing, data center construction, a number of different trends. A lot of those, the ability to play them directly through small and mid-cap is actually very good. So again, you have sort of a market phenomenon that could possibly lead to better performance, broader performance in small and mid-caps. And you have some fundamental drivers that I think are worth looking at as well.
Yeah, and we'll get into that too, because when you're looking at the SMID space, valuations look pretty rewarding right now, and of course there's risk involved because there's sort of more high floating debt inside of the small cap space particularly. But of course we're in this environment where the Fed is cutting rates. And here at CIO, we expect the Fed's going to cut another 125 basis points between the next meeting in December of the Fed and all of 2025. And just to level set, so our audience is aware, here our house view at CIO at UBS is large caps have an attractive weighting while small and mid have a bit of a neutral rating, I think because of those combinations of that floating debt, but also valuation. So when you look at risk and reward there, Tom, what do you see? Like, what makes combining small and mid in a portfolio really interesting? And maybe I already buried the lead here, but what are your thoughts on that?
Yeah, so obviously, I think as you look to broaden your equity exposure, you can think of small and mid-cap as two separate asset classes, or you could look at them in one unified portfolio. I think, and you hit the nail on the head from a risk perspective, combining them together, I think actually can help you tamp down some volatility relative to pure small cap portfolios. So that seems to be something that, you're able to get access to some of those returns, but with not as much of the volatility, which might give you a little bit more of a smooth investment performance, if you will. And I think that's kind of probably the main reason to think about two of them in a single portfolio. The other aspect of it, I think, is if you're, kind of looking at small cap stocks and you have sort of a history in them fundamentally, and you understand the mechanisms of those businesses, if you are able to keep them as they kind of graduate into the mid cap space, you can get very nice long-term returns based on the idea that you've identified good companies early, and as they sort of graduate from the small cap to the mid cap, they can stay in the portfolio. So that's another way to kind of think of it. Those are kind of, I think, broad parameters in terms of thinking about how small and mid caps in one portfolio make sense. There's also a very sort of, pragmatic or practical perspective, which is that way you have a single portfolio to kind of keep an eye on, as opposed to two separate ones. And you can also make sure that the composition of that portfolio is consistent across the whole asset class, as opposed to potentially having duplication between a small cap and a mid cap portfolio.
Yeah, that's very compelling, Tom. And obviously, going back to the kind of commentary on the Fed, with the Fed looking to cut rates as of right now throughout the rest of this year and into next year. And how do these catalysts maybe set up the small and mid-cap space looking into 2025?
Sure. I think, look, there's a very good chance that rates will continue to come down. Obviously we've had some volatility there, but either way, I don't think we're expecting them to go back to zero again, which, we've had this long run here where large cap stocks have outperformed small and mid cap, which is actually contrary to the longer arc of investment history. And I think as we go forward, I think rates may be a little more accommodative, but again, likely not going back to zero. If you think about the small and mid cap space, what's going on in the economy, if we have continued sort of development of the domestic economy, even if we slowed down a little bit, those are great opportunities for a lot of these companies. And, through small and mid caps, you can play, again, some of those trends directly. They tend to be less diversified to some extent, the smaller companies. So it's important to have thoughtfulness in terms of how you put that portfolio together. But, we look at, what's relatively a constructive backdrop for equities at this point. And what looks like a sort of somewhat forgotten asset class, that adds up to probably opportunity. And you layer on top of that what looks like some identifiable business trends, again, that the small caps can really kind of directly exploit. It could be a nice thing to add to a broader equity portfolio.
Absolutely. I mean, clearly, we always say here from our CIO and UBS that diversity really is key in any successful portfolio, and working with a financial advisor is the way to do that. But you're looking at sort of risk management, especially when you're in the small cap space, particularly, especially pure small cap play, because there's a lot of companies that are really not profitable in there. And then you also have these high floating debt rates, et cetera. So how do you approach risk management in the space? And give us the sort of the real reasons, or the reasons why active management right now makes more sense than passive, especially in SMID.
Absolutely. I think as you come down cap range, a few things come to mind that makes it, in my perspective, kind of interesting to consider an active approach as opposed to a passive or an index approach. First and foremost is, as you move down cap, some of these companies are not as overfollowed as some of the mega cap or large cap stocks. To me, that speaks of some inefficiencies. And if somebody has done some good active fundamental research, you can identify companies with better prospects. You're going to want to populate the portfolio with those stocks over anything else. Secondly, and you mentioned this, if you look at the small and mid cap space combined, something in the neighborhood of 20% of those companies are non-earners. If you look at small cap, it's even higher than that. So if you're just going to buy it via a passive vehicle, you have to be sort of buyer beware. You have to know what's in that portfolio. A lot of those stocks may have issues in terms of self-funding their growth. And if conditions kind of change, it's going to get harder for them. So once again, I think an active management approach where you keep an eye on the quality of the stocks in the portfolio probably makes sense in this space. I think also, look, we've talked about there's a pretty constructive backdrop out there, but there's certainly uncertainty. We just had a big election. Interest rates, have moved down, but then moved up a little bit. It's unclear, the exact path forward. And obviously the growth rate in the economy, we're not sure where that's going to pan out. Again, all of those things, I think, lead to the idea that this space, while it does provide opportunity, probably makes sense to look at it from an active lens, where somebody is sort of, very carefully picking your exposure in the space.
Excellent. Tom, thank you. It's a really compelling story, especially given that small caps right now, valuations are really attractive versus large caps. So it kind of suggests that maybe they could potentially outperform large caps over a certain time horizon. So it's a really good time for folks to be kind of looking into how to diversify their portfolios. And an active approach certainly makes sense given the context of what you just talked about with us. Tom, thanks very much. Great rundown for us.
Thanks very much.
Yeah,
Appreciate
absolutely. Good to have you. Tom Marr again from Hilton Capital Management. And thank you all for joining us. There's lots more information on this topic and more by visiting our Insights website at ubs.com/views. And plus, you can follow us on all the major social media channels, including Instagram. Give us a follow right there. It's right on your screen. And as always, if you have any questions about this topic or any others, make sure you are speaking with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day. And remember to keep your eyes on what's trending. See you soon, everybody.